What's up, beautiful people out there? Welcome back to Power to People Radio, the People's Podcast, your nonstop shop for information on personal development, financial literacy, and everything and anything you could think of on being the best version of yourself. It's your host on the set today, right? Hugh Huncho, the one and only, with my main man, Trey
And your
himself. What's
co-host
up,
Trey.
bro?
What's going on, man? Peace, power, and love to the people that's listening out there. So, got another episode for you guys today. Definitely want you guys to hear a little bit about what we got to say. This is part 2 of the free game. If you didn't check out the last video, we definitely want you guys to go ahead and give that a listen. But we're going to be
To
talking
some
about a few
sauce,
different things
man.
today. For sure,
Part two
100%.
to the sauce, for sure.
For the sauce.
For sure. For sure.
Um,
I mean, honestly, we could really get right into it. Trey, when we was brainstorming, we was kind of thinking about like, all right, what are some things that that could really help a lot of people, and something that we both resonated on is something that most people don't know how to do is work on their credit, right, or get their credit in order. And
right.
credit is honestly a very powerful thing. Credit is like, think about it as like your adult report card. You know what I'm saying? Back when you were in high school, middle school, if your mom and dad asked you like how you was doing, right, in school, what would you do? You would pull out that report card, right? Especially if you had some A's on there, you pull in that with a lot of confidence. If you got some C's and D's and the famous F, you hide in that report card until the next semester until you can bring them grades up. So your
Boy
credit
said the
score is like the
famous
same
F.
exact thing. But being an adult, the only thing about it though is that you can't really hide it, right? As soon as if you try and apply for a car, if you even try and I think even if you try to like just borrow like buy an iPhone and do like the payment plan, they run your credit. Right. So if you don't have good credit, you can't qualify for that. So if you're trying to get like an apartment, a car, a house, yeah, honestly, even jewelry, even certain jewelry, like if your credit not good, they're not gonna sell it to you. So your credit is actually really, really important. So yeah, we just gonna kind
And
of break out some
huge,
sauce
huge
on it.
this huge disclaimer out there in regards to credit. Don't listen or don't copy what your parents did, because a lot of our parents
Facts.
and grandparents, they didn't know too much about credit. They grew up in a certain generation where they were told to be scared of credit because
Mm-hmm.
depending on how old they was, it was relatively new and it was something to be scared of. Why? Most people fear things that they don't have knowledge on. You understand what I mean? So don't have that same fear-based foundation when it comes to credit just because you don't know all the ins and outs about it. We're living in a
Mm-hmm.
21st century where all the information is available via YouTube. So you guys
Mm-hmm.
could definitely, YouTube some things and get a little bit of better understanding on exactly how it works. Because just like Hugh stated, this is definitely something that's important and it sticks with you as far as your adulthood. Something that you need pretty much to purchase any major purchase or anything that, requires any financing. So,
Yeah. So to
where
kind
would
of
you
break down
start,
what
Hugh?
credit really, yeah, I was gonna
Go
say I
ahead.
was gonna
Go
break
ahead.
down real quick what credit is, how it works, some of the key components that most people don't know about credit, how they can do some things to get their credit not only on the right track, and if it isn't on the right track, right, how you could kind of fix it. And then I'm gonna pass it back over to you, Trey, and you could basically break down a little bit about business credit, the importance of it, and what was your experience with credit so far. That's straight with you. Sounds like a plan.
Nah, yeah, that's cool.
All right, bet. Let's get right into it. So basically, what credit is think about it like this: like credibility, right? Like if somebody asks you like how credible you are, what does that mean? It's like how reliable are you? All right, that means that if I was to give you some, $100, how reliable or how credible are you to giving me that $100 back? All right, so you could think about credit like that, right? That's kind of what it stands for, credibility. So, in a sense, right, your credit report is like your report card for these financial institutions to know how well your credibility is. The it's basically ranges on a score, on a metric, right? The lowest could be you can get to have a 200. If you have a 200, then I'm not gonna lie to you, you should probably just like just start become a whole new person, right? Like create a whole new social security, become a whole new person because it's over for you. But I'm joking, right? If it's at 300, 400, it's fine, it's manageable. You could actually bring it back up, but it does range between 200 to 700, right? Most low people are in the 300s, 400s, or 500s. Once you get past 660, that means you're in a fair, right? That means you're decent, right? You're above most people, right? Most people are below 660. Once you get to the 700s, 720s, 760s, that's when you start having really good credit, right? 720 and above, that is a really, really good spot to be at. 720 and above. You don't necessarily need to get all the way to 800. It really wouldn't matter the difference between 760 to 800, but as closer you could get to 800, the better. Your credit is made up of five main categories. It's made of your credit history. It's so what that means, how long have you had credit? It's made of your payment history, right? How long and how many times you've made payments on time. Your credit. Actually, let me just pull up everything right here for you, so I'll give it to you guys exact.
Your credit history, also your credit limit, right? Your credit, my bad. Your credit utilization, how much you're
Yes, sir.
utilizing the amount of credit that you have, and then did you already state the revolving credit? As far as I know, those are the two that I definitely know.
Yeah, so basically, your credit history, your credit utilization, right? So how long you've had credit and how much of your credit you're using. Derogatory remarks. So that's if you have anything negative or anything positive on your account, right? Positive things would be like, of course, if you worked in the military, right? Negative things would be if you had collections, right? Or if you moved around a lot, right? And then maybe you have multiple addresses on your credit report, right? Those can all be negative things that can impact you, because it makes it seem like you're multiple people, right? You don't want that, right? So collections, hospital bills wouldn't really come up on derogatory remarks, so you don't need to worry too much about that. They don't really affect your credit because you can't really control that, right? But collections, um, those are derogatory remark. Your credit age, right? But I like to put credit age and credit history in the same category, right? Because that also ties in with payment history, and then the total amount of accounts, right? So how many things you actually have on your credit, how different they are, and then hard inquiries, right? So hard inquiries basically means that every single time you go and apply for credit, whether you get a loan, whether you go to a car dealership or anything, you're going to run your credit. The more hard inquiries you have, the reason why it negatively impacts you is because it's like, why are they fishing for credit so much in such a short amount of time? That's why you don't really want to have a lot of hard inquiries. When you go to a car dealership, right, this is best, and this is some sauce right here. Whenever you're going to a car dealership, I highly recommend, if you could, a couple of months before you go make that car purchase, you open up a bank account with a credit union. If let's like credit, I'm not going to tell you which credit unions, just do some research, but open up a bank account with a credit union, build some trust. And the way you do that is by putting some money in that checking account, using the checking account, setting up with your direct deposit, right? The more money you have going into the checking account, the better. Once you get a good credit score, you go to your credit union or your main bank, even if you want to do Bank of America, which wouldn't be the best, but credit unions are better because they're going to give you a bigger amount, right? But you're going to go to that credit union or you're going to go to your bank institution. You're going to ask them for an auto loan, right? You're going to literally tell them that you want an auto loan, and they're going to give you a pre-approval check. They're going to give you a pre-approval for whatever the amount is. Let's say the car you're buying is 20K. Tell them to give you a pre-approval check of 25 or 30,000, right? You want some wiggle room there, because when you go to the dealership, they might start marking up the price
Hit
and
you with
stuff like
all them
that. So
hidden
you want some
fees.
wiggle room there.
They hit you with all
Exactly.
them hidden fees.
Exactly.
And let me pick up from there though, as far as if someone's trying to, get a car loan or whatever. Like let's say they do the steps that you did. This is from personal experience. Do not let those dealers at the dealership trick you into financing with them or financing with another bank. Because they'll straight up lie to your face and tell you that they won't take that pre-approved check from your credit union. That's a
Mm-hmm.
bold lie. That is called predatory financing, meaning they're trying to get you to go with someone in their network of banks. Reason being is because sometimes it does take a little bit longer for them to clear the check. I believe it takes around 45 days and they rather get paid faster. However, it's labeled as predatory lending, my bad, predatory lending when they don't take the pre-approved check from, your finance
Mm-hmm.
company with the Navy, Federal, or whatever union you're using. You know what I mean? So
Mm-hmm. For sure.
That's
For
major.
sure.
You definitely want to do your due diligence on that. But yeah, I just wanted to
Yeah.
add that point.
You definitely want to do your due diligence on that. And the reason why I tell you go get the check first is because when you go to the dealership, now it's like you walking in there with a bag of money. Right, you already got everything that you need to get the car and leave right then and there. You see what I'm saying? And you can finance it through your bank, right? You can have the loan through your bank, right? Various different things that are advantageous. And even if you want to refinance it later on, you can do that. But just having that pre-approved check when you come in there is it's really really key. The only time I would say that maybe you could go with your dealership is like if you know the person selling you the car personally, like maybe they're a family friend, you know they're not going to run your credit on multiple institutions because that's one thing that they'll do, right? They make money off of getting more people to work with these banks. They make money off of running your credit, so you don't
Right.
want them running 5, 7 institutions because that's 5, 7 increase for no reason when you're only going to get
Hard
financed
increase
by
at
one
that.
bank.
And
Exactly.
hard
Harder
increase at
inquiries
that. And then
too.
not only that, the rate is going to be way higher. The interest is going to be spiked up. Literally,
Exactly.
might even be
That's
double
another
the
thing
time.
as well.
Seriously.
That's another thing as
Um,
well. That's another thing as well. Like if they'll offer you a higher interest rate because you're gonna pay more money if you go through them compared to if you go through your personal bank, they know you personally. They see your credit report personally, stuff like that. They are more likely than not gonna give you a lower interest rate. Right? A good interest rate for a car, I'm telling you right now, is between 3 and 7%. The lower, the better. If you could get 2%, if you could get 3%, great. It's very hard to get 2%, right? Most people fall around the 6, 7%. If you pay 10% or more for your car, you need to sue that dealership. Like no cap. Like you should not be paying 10% on your car. Just do the math, right?
another
Just do the math. If you buy a car for 50,000, you have to pay an extra 5,000 on the car, and that's only if you paid within that time span, right? Like, and most times the math that
mhm.
what they tell you the car lease is going to only be 3 years. No, when you do the math, most times the car lease is going to be, I think I said that and a half. So like they say 3 years, you're really going to pay for 5 years, right? If not six. So that's just some sauce, but I don't want to stay on that for too long.
I
Back
want
to
to
the
add
topic.
this real quick. Real quick. If you're trying to,
It's credit
bro, I
day,
know
bro.
it's
I can really get into it,
yeah.
bro, for sure.
No, facts. Two things with the credit. Number one, if you're just starting off and you don't even have a credit card, I suggest that you go ahead and get yourself a just lots of terminology as far as what kind of credit card it is. Um,
Secured credit card.
I suggest that you get a secured credit card. Start off with about $500, and if you guys don't know the utilization rate, do not cross the 30% boundary. 30% of 500 is 150. So you can use it for little things like gas here and there, or whatever, and then make sure you pay it off every single day. Not every single day, every single month. And I suggest that you guys actually pay it off before the cycling bill is. That's number one. Number two, on the
I'm
example,
about to give them some quick sauce too.
real quick. Number two, on the example of the vehicle, another thing that we want you guys to realize, you don't have to live the lime life of the people on your social media feed. And what I mean by this is you don't need a 2024 car. You don't need a 2025 car. We all understand that as soon as you drive that car off the lot, it loses its value. So if you want to get Dodge Challenger, if you want to get the new Benz, if you want to get a new Toyota or whatever, there's really no point because it can be worth 40,000 on a lot, but as soon as you drive off, it depreciates, let's say $10,000 or whatever the case may be. And when something depreciates that much and that fast, it's labeled a liability if you ask me. You understand what I'm saying? So it's no point of trying to go for the newest vehicle. Now, if you want a better vehicle, and you're tired of, like, let's say you have a hoopty or you have a car that needs a lot of work, it's understandable getting a car out the dealership. I'm just saying you don't need the newest car. You feel what I'm saying? There's nothing wrong with getting a used car.
Facts. I
But
want
I
people
just
to
wanted
be
to
like
add that.
real wise because cars, car debt, right? Like car loans and personal credit card debt are like the two biggest things that hold a lot of Americans back from gaining success and wealth in general. Because like if you paying 3, 4, $500, $700, I know people paying $700, $800, maybe $900 for a car note, and then you paying $300, $500 for car insurance. That's literally a grand. That's like $1,000, like leaving your pockets every single month just for you to get around. You know what I'm saying? Like, and at the end of the day,
Hmm.
what a Corvette is gonna do is the same thing a Toyota is gonna do. Like, it's gonna get you from point A to point
Gets you
B. So
from
like,
A to B.
really like keep that,
Yep.
like really just think about that and keep that in mind. But I do also want to give some sauce real quick because you mentioned about the secured credit card, right? For people getting started with their credit, secured credit card is really good, right? You can also ask any family member who got good credit to put you as an authorized user on one of their credit cards. This is some sauce that's going to get you to build your credit really fast wherever you get that secured credit card from, right? Whether it's from your personal institution, your bank, or you go to like a credit card company directly like Discover. If you open up a secured credit card, right? That means you have to give them $500 and they're going to give you a secured line of credit for $500. You max out that credit card as much as you possibly can. Like, and what do I mean by that is that with that secured card, like think about it, like that money is secured. So even if you don't pay it off, you're still good, right? But you definitely want to pay it off. But what you want to do is if they let's say they do 500, right? You want to use that secured credit card on every single thing you purchase moving forward, right? Max it up all the way to 500, then pay it off. The same amount of money that you would have used for your debit card, you just use it on the credit card. What happens is that, and you want to make sure you pay it off. They're gonna see that this person had a secured card, right? They were maxing it out, meaning they need access to more credit. They're willing to use this credit card, but they're also responsible because they're paying it off in full as well every month. When the 6 months or a year roll around for them to upgrade you, instead of them upgrade you from 500 to 1,000, which they do for most secured credit cards, since they've seen you've been maxing this out every week or every month and paying it off completely, right? You want to pay it off completely. You can do the utilization above 100, above 30%. You just don't want to keep it there, right, for longer than a month, right? You want to pay it off that month before it's being reported. Once you pay it off, a year, 6 months from now, whenever they're ready to upgrade you, they won't be doubling you. They might quadruple you. So instead of 500, you might get $2,000 credit limit or a $3,000 credit limit. Maybe get a $5,000 credit limit, depending on, of course, where it is and how much you're using it. But that's a little way that you cheat the system because it's like it's an algorithm that is reporting and watching all of these credit scores. So if you build up the points on there, right, like how you should, they're gonna the system itself is just gonna have to upgrade you to a higher amount, right? The whole idea for credit card companies, they make money by us not paying off the credit cards. They make money from the
Hmm.
interest that we accumulate. So they
Right.
want you to use the credit card. They want you to have a high limit because they know most people are irresponsible with it. Most people are going to run up that credit card limit, not pay them back, and then what's going to happen is that they're going to send it to collections. It's going to be on your debt, and you eventually are going to have to pay it back. Like, they're going to get their money one way or another. Like, they're just really
And
patient. Like, they don't mind waiting.
like what we said earlier in the episode, your parents might have made that mistake because they might not have the right coaching or the right direction on how to actually use a credit card. But you're
Exactly.
different. You have YouTube tutorial, you have YouTube University where you can Google and YouTube and search anything, and any questions that you have will be presented in a video. So there's no
Exactly.
excuses for you not to start to build your credit in the right way. The fear
Exactly.
is not, you shouldn't be fearful since you understand, or you have the capability to understand how it works if you go ahead and, do your due diligence as far as trying to get an understanding,
Facts. Facts.
you
Exactly.
know. Um,
You got the internet now and you got Power to the People radio. So there's no excuses now for you to not be informed. As long as you tune into every single
100%.
episode, you will be informed and you will be tapped in for sure. So just to
Facts.
quickly recap so we could go ahead and go into how can somebody really leverage their credit. All right, now we know what the 5 categories are. We know how we could get started with our credit. We know how to be credit conscious, right? Like Trey said, right? If you're going to use a credit card, if this is not like a secured credit card and you're trying to maximize the points on it, you want to keep the utilization below 30% if you're not going to pay it off entirely every single month. All right. You want to make your payments on time so you can have 100% credit history. As far as
Mhm.
credit age, the longer you had credit, right, the better. So the soonest time to start building your credit is today. The second time, the first time, the best first time to build your credit was yesterday. The second best time is today, right? So what do I mean by that? Is this: if you are 14 years old, you can open up a credit card right now. If you are younger than 14, if you're 13, your parents can create a an authorized user as one of their credit cards and put your social security on it. So now you have a credit card at 13. By 18, right, you can start applying to major credit card companies. But I recommend as soon as you can get a secured credit card or get any kind of credit card, because the more time you have, the better the age that you have to work with. Now the thing about it though is understand that the more credit cards you open, it starts deducting from your age, right? So just keep that in mind. Once you get your personal credit right, now you can start leveraging it for business credit. And this is where I'm gonna pass it off to Trey. Like Trey, let me ask you, right? Because you're a person who ran a business, right? You understand how business credit is, or well, at least you understand the importance of it now. Not only what is some advice you would have gave your younger self, but explain what is business credit really and like how does it work? How do the people can capitalize on it?
Yeah, so business credit has to do with a separate entity that your EIN and your LLC is under, right? It's separate from your actual personal credit, which is also very vital in terms of, building that business credit, because you need to have your personal credit established in order to build up your business credit. So your business credit is tied to a separate entity, like I said, which is your LLC and your EIN and what that falls under. So it's completely separate from you. Now, I know a lot of people probably heard out there how you can get your house under your business credit. You can lease it out. You can put your car under your business credit. You can do a lot with business credit to where it doesn't have any direct ties to your actual person. Meaning, if someone was to go ahead and collect something, you know what I mean, it would be in your business name, right? But how to really get that started? Number one, you need a business bank account. Number two, you need an EIN number in the LLC. And then I would say the third thing is to have your personal credit already established enough to where you could go ahead and apply to some of the banks. And once you apply, depending on what your personal credit is, it's going to be a hard inquiry, but there's ways around it to where you don't have to actually get a hard inquiry. But if you want it right away, then yeah, it's going to be a hard inquiry. And based off of your personal credit, they'll give you a credit card loan for, let's say, 5,000 credit card limit. And then from there, you just pay it off and you use it and you pay it off just like a regular credit card. You know what I mean? Good thing is
Mm-hmm.
this one's not tied to you though as much as the personal one. It doesn't hurt you as much. You know what I mean? And then you can also
Mm-hmm.
have a lot of inquiries on your business credit and it doesn't hurt you as much as your personal credit. So that's sort of kind of the difference in a nutshell. I know I probably missed a few things, but you got the message I sent you, or you want to keep?
Yeah, no, honestly, you definitely said it really well for people to understand kind of like the difference between business credit and like personal credit. And one thing I do want to emphasize too is like what you said, like get your personal credit right first, because your business credit
Hmm.
is kind of going to be like is going to kind of go off of your personal credit if that makes any sense. Like how your business credit
Right.
starts off or reflect is going to base off of what your personal credit looks like once you start applying for business credit. Um, but yeah,
It's like, think
honestly,
about it like this in terms of an analogy. Think about it like this. What you did in high school, going back to the report card thing, what you did in high school and how you performed is going to be based off what colleges you can get into, right? When you're having those college applications, some of them deny you because of how bad or how good you did in high school.
that's a good
So think of it the
analogy.
same thing, just like your personal credit aligning with the business credit when you go ahead and apply. Sort of kind of the same thing.
Yeah, no, that's definitely no, that's a good analogy. That's a really good analogy. I didn't think of that. That's actually really
Nah,
good.
you mustered it up. I just added to it.
Nah, no cap, no cap. I mean, I know we already definitely gave like a lot of sauce already right now for this episode. Kind of broke down real quickly like credit, how important it is and how you could kind of get started. We'll leave some very useful resources in the description, right, where y'all could do a little bit more research on it. And if y'all have any questions, definitely feel free to drop any kind of comments, and we'll be checking them and we can answer them as we go. But let me know, Trey. Did you want to add anything else for this episode?
Um, yeah, last disclaimer about credit, really personal credit. Do not use personal credit to fund the lifestyle that you want if you don't have the money already in terms of having the actual cash and capital. Because what you'll do is put
True.
yourself in debt, and then you'll have to pay that debt
Yeah.
off over time. Whatever the reason was for you trying to keep up with the lifestyle or trying to use the money that you don't have. That's not what credit is for. Credit is really for emergencies, um, emergency basis, and for the most part, you should be strategically utilizing it to build up your personal credit. Right now, I get it. Some people use it for vacations that are costly, but they have the means, so they pay that off, the next month. But do not use your credit if you don't have that money, unless it's an emergency. That's my last disclaimer. And in
Yeah.
terms of business credit, I want you guys to know it does take time to build business credit. It takes about 2 years for you to actually have a good set foundation to where you can actually start utilizing some of the things and getting additional funding and things like that. We'll probably talk about that in another later episode. But as far as credit, man, that's about it. That's all I got. You got any last jewels you wanted to drop on the people?
Yeah, honestly, I'm gonna just put a cherry on top to what you said, just because I could actually relate to that. I'm a person that like I got a very high credit limit. I got like a lot of credit cards, and just because I was going
Mhm.
crazy, once I started learning how like credit really works, I cleaned up and fixed my own credit, and I was applying everywhere. I went to Amex, to Discover, went to Bank of America, went to Navy Fed. I'm like I'm running it up. Now the thing about it though is that I have a lot of credit cards, right? But I will be completely honest with you, right? I wasn't using the credit cards, right, for like any kind of lifestyle thing, but I was just trying to get a lot of the points. You know what I'm saying? Get a lot of the points and the
Mhm.
rewards from the credit cards from when you open up. Now I'm telling you, these credit card companies, they're smart. They know that most people open up the credit cards, get the points, get the rewards, but then they don't pay them back. And that's why they offer you all of these promotions and all of these discounts and promotional interest rates and all that other stuff, because they know, right, that's compelling, it's enticing, it's going to get you, and then most people aren't going to pay it back off. Me, since I already knew what the trap was, I kind of like tipped my toe in the pool, if that makes any sense. I opened up a lot of credit cards, and my credit score was still good. I'm using the credit cards, but the thing about it though is that now what happens is that you got to keep track of the revolving due date of those credit cards. And what happens is when you use a credit card, it doesn't post immediately like how it would on your debit card. So you might use the credit card and then think, okay, like I'm good, my bank account is still good because the money's there, but you don't realize you're still using the money in your bank account, but the credit card still hasn't been paid off. So then now you might accidentally miss a payment, accumulate interest, or now you use another credit card. Now you need to pay that credit card and pay that credit card, but now not realizing you're using more money than you would have, you're spending more money than you would have spent if you just used your debit card and you was tracking all the money in your checking account, right? That's why most of our parents were afraid of credit card, because it's kind of hard to track. Like if you make a purchase, they don't post it until a day or two later. And then let's say that
Mhm.
money you use it for rent or for groceries on your debit card, now that money's lost. You see what I'm saying? So I say this to say it's a very big disclaimer that once you start really utilizing your credit, you want to do it in increments. You want to be mindful of um, the purchase you make per day, right? Making sure you have the money already for that purchase, and if not, knowing that you're going to get the money back quickly, right? So it's not sitting there as built as a balance, right? Accumulating interest. And yeah, just be mindful. Just be mindful. Credit is very, very powerful. You don't want to put yourself, like I said, in too much debt, because the interest rate that they're going to give you is going to be more than the cash back that they give you, right? Like think about it, like 2% cash back, but they give you an 18% interest rate. You see what I'm saying? You see what I'm saying? So you really want to be mindful of it. Utilize credit as a tool. So when you go apply for that house or for your car, now you can show them like you really know what you're talking about, because you build up real good credit and a good representation, a good report card. Feel me?
Right. Well, I think this is a fire episode for the people who aren't too familiar with credit, or, you know, um, they're beginners in the stages of trying to get an understanding. we definitely want to guide you guys in the right direction. So, like you said, we're going to link some of the resources in the description so you guys could do your due diligence as far as getting a better understanding. There's videos out there that you guys could study upon. But overall, man, definitely fire episode. I hope you guys tune into the last one and definitely tune into the next one. We want you guys to like, share, and subscribe. Let us know what you think in the comments and ask us any questions, that come to mind, and let us know what other topics you guys want us to talk about. Other than that, it's definitely been a nice layout as far as letting you guys know about credit. Got anything else, Hugh?
Nah, that's really about it. That's really about it. That'll conclude this episode for part 2. Right, stay tuned for part 3. Honestly, we might even start like a free game series. But honestly, there's a bunch of things that we could definitely give out to the audience. Some advice and yeah, just well guidance, bro. Just like some tips on what y'all could do to be the best version and most powerful version of yourselves. But with that being said,
Facts.
right, that'll conclude for this episode. Until the next episode, stay blessed, stay beautiful, and stay powerful. Peace.
Sir. Peace.